ADP report is just out. ADP says the U.S. economy added 113,000 private sector jobs last month. That compares to a consensus estimate of 130,000 jobs. September's total was unrevised, still showing the addition of 89,000 jobs. But if you want to break into where this happened, goods producing sector, only 6,000 of those jobs. 107,000 came in the service providing sector. The biggest gainer was from education and health services. That was 45,000. You also saw 35,000 in gains when it came to trade, transportation, and utilities. And the biggest decline came in the professional business services. That was down by 10,000. If you were looking by regions on this, in New England, the Northeast, or not just New England, in the Northeast, it was 21,000. The biggest gains came in the South, where you saw 64,000. The West did pretty well, too, up by 46,000. It was maybe a surprise decline in the Midwest, where you did see a loss of about 13,000 jobs. And if you're looking at what type of establishments saw the gains, small establishments, small businesses, 19,000. Medium establishments, which would be anywhere from 50 to 499 employees, that was 78,000 of the gains. Then large establishments, 18,000. Joining us right now for more on this new employment data, we want to bring in Neela Richardson, who is chief economist at ADP. Neela, let's talk a little bit about this. A surprise maybe that it was a little below expectations, but you're still talking about a pretty strong jobs market overall.
Yeah, good morning, Becky. We are. It's solid, it's steady, and it's positioned to support that uptick in consumer spending that we saw in the third quarter, help it last a little bit more through the end of the year. What we're seeing, though, is that there is a decline in wage growth, pay growth. So this is a solid labor market, but we're not going to see the supersized increases in pay that defined last year. It's a different type of market. Firms are holding on to workers, but they're not paying up for them. And I think that does have an impact on what the Fed does later today.
I would almost beg to differ with that assessment of it. JobStares reported a 5.7% year-over-year pay increase. I know that's the slowest pace of growth since October of 2021, but 5.7% is well above the rate of inflation. And if you're talking about job changers, that was 8.4%. Again, I know that was the smallest increase since July of 2021, but those are still pretty decent numbers for people who are home getting these, and potentially a concern for the Federal Reserve if they are worried about inflation coming down.
Except when you break those numbers down by industry, especially when you look at the pay distribution behind those numbers. We've seen that the strongest pay growth has come from leisure and hospitality. Now, if you look back at the numbers, this was the first month where leisure and hospitality did not dominate hiring. In fact, education and healthcare was the strongest with the ADP numbers. What that means is that low-paying jobs have been the job leaders. They've been the stalwart of the recovery. And now that leisure and hospitality is coming close to 2019 levels, it's starting to slow. So what we're seeing is a market that is on the brink of that slowdown in the wage growth that we've seen be the strongest, and that's for the lowest paid workers. I think that has more of an effect on the consumer and on Main Street than on the Fed's policy decision, where we're still not seeing wages lead to a wage price spiral that could lead to even higher inflation.
I'd look at those numbers and be a little concerned. So we're stiffing healthcare workers like nurses and teachers?
I don't know what you mean by stiffing.
Well, if most of the job growth is coming there and they're not seeing the big wage increases.
Yeah, I think what we're seeing is that the care economy is always going to be important. It's not as interest rate sensitive as the goods sector. You see that weakness in the goods sector, construction, manufacturing, housing has been in a near frozen pond over the last year because of higher interest rates. But the care economy, especially when you add the demographics of an aging U.S. population, will continue to see hiring. Now, you're right. The wage growth that we're seeing is not going to be the same wage growth when companies were hiring in full force just to replace workers who walked out the door or who were impacted by the pandemic. This is a more normalized, more volatile labor market, but I think the big picture is it's still steady enough to support the consumer, though I do share your concern when it comes to education and healthcare and being able to meet the demand that we know is coming and that we know already exists in this particular industry.
Hey, Neela, I guess I blame the blunt instrument that what the Fed has to use to manage the economy for this, but I find myself when I see a weak ADP number, I find myself hoping that gives us some insight into what could be a weak number on Friday. I don't want to hope for weak jobs numbers, but I just do. And last time, I think ADP had a pretty weak one, and then we got this crazy strong number. Does it month after month? Does it regress to the mean? Do you think you think you'll be like right on this time in terms of forecasting what happens on Friday?
No, never right on, because we don't forecast anymore, Joe. We haven't been for a year. But what I can say is that even though the month-to-month will differ, because these are two different numbers with two different data sources, the overall trend is very similar. So if you look at the last 3 months before this jobs report in October, the numbers in private sector jobs are very close between the BLS and the NER. The month-to-month may differ. And I think the timing is important here. What we're measuring is very important. We are asking our data, and this is actual data, it's not a survey, how many people were on payroll this week. What the BLS is essentially asking, and it is a survey, is how many people did you pay this week? And so there's a bit difference in how these things vary from week to week. But what we're seeing at ADP is solid, moderate growth. We're not seeing the blockbuster headlines, and that's mainly driven by a leisure and hospitality sector that's calmed its hiring down from when it was trying to get people in the door after taking such a big hit during the pandemic.